is a people business, that is not someone whose advice you should be taking. The highs are high and the lows are low. I think the most important thing is
I have Jessie Dillon with me today. And today we're going to be going through her story in real estate and a little of her backstory to see where she came from and where she is today. And thank you, Jessie Dillon, for coming on the podcast.
yeah, thanks for having me. I'm happy to be here.
What led you to going into real estate?
So since 2017, I've owned a beauty salon, and I was primarily working in the beauty salon as well as owning it. And you might not think so, but in the beauty industry, if you provide services, there's a lot of repetitive movements, there's a lot of long days, there's not a lot of breaks. It can actually be really tough on your body. So I was realizing that I was developing a lot of serious body pain that nothing was fixing because I was continuing to overwork myself in the salon behind the chair. So I realized I kind of needed a way out of that, whether it be a fast way or a slow way. I just knew I couldn't be doing that forever. It wasn't sustainable. So a couple years ago, I actually was just scrolling through Facebook and I found a clickbait article about a girl who was retiring at 26. And I was like, I got to know more about that. So I clicked through, I read the whole article, and it was basically introducing me to the FIRE movement, which I had never heard of before. And if anyone listening is not familiar, it stands for Financially Independent and Retiring Early. I actually messaged the girl who the article was about on Instagram and I explained my situation. And I was like, if you could recommend one book to me, what would it be? And she recommended The Simple Path to Wealth. So I went so far down the rabbit hole of aggressively investing in index funds. Very fortunately, I could easily live on about 30% of my income. So I was aggressively investing about 70% of my income, 50 to 70% every month. But I realized it was going to take me 11 years of doing that to retire. And I
Wow.
knew I couldn't keep up that pace for 11 years. So one podcast led to the next. And on one of the FIRE podcasts I was listening to, there was a real estate investor being interviewed. And his, whole theme was that you could achieve FIRE, early retirement, in more like 2 or 3 years if you play it right with real estate. So after I heard that, which was like summer of 21, I went so far down that rabbit hole, just learning everything about this whole real estate thing. So I spent a couple of months just being like a full-time student of all the podcasts, the books, the boot camps, the coaching calls, and Thanksgiving week of 2021 is when I made offers on my first property.
Wow. What was that like after going through all of that work to make that first purchase?
It was a little scary just because, nobody in my life does real estate investing. So I don't come from a family of entrepreneurs or investors. I don't have any friends who do anything like this. So there was a lot of naysayers, but I did feel over prepared because every book and podcast started to sound the same. So I knew I have enough information to do this. I know what I'm doing. I know enough to at least take this first step. So it was scary because of, not having anyone in my inner circle who was doing this, but I definitely feel like I was ready to do it.
How old were you when you first started to get into it in 2021?
29.
Did you have support? So you said you had naysayers. Did you have support on the other side?
Yeah, absolutely. So my husband, Pat, has always been my biggest cheerleader with everything in business and in life. And he had seen what I did with the beauty salon and, building that from scratch and just putting everything into it and figuring it out at all costs. So he had just endless confidence in me when it came to real estate. When I had said, hey, I want to do this crazy thing and buy a rental property with all of our money, he was like, if anyone can figure it out, it's you. So
That's
I think
awesome.
his support seriously outweighed anyone who was skeptical of what I was doing.
What was your overall investment strategy in the real estate process?
So at that time, I knew that I wanted to do long-term rentals. I knew that I was not going to be comfortable yet investing long distance.
Yeah.
So I wanted long-term rentals close by. And I also knew that I had a finite amount of startup capital. So I knew based on that what my price range was that I could be looking at. And I also got a feel for which neighboring towns, like close by, maybe within a half hour, were going to cash flow decently. Um, so having that specific criteria definitely helped. So that first property that I got into was a duplex, and I still own it today with two long-term tenants in there. Um, and it actually ended up being a really, really good deal for being my first deal. I think I was a little spoiled because I got to buy it at a steep discount just because it had been listed for a while, and I really built rapport with the agent. And um, I think I got it at like a $60,000 discount.
Wow.
Yeah, so that was pretty nice.
With you doing that, how important is building that relationship with the agents?
I mean, I think relationships in real estate are one of the most important pieces because there's nothing that you cannot do or achieve in real estate if you're connecting with the right people. And not just connecting for the sake of connecting, but like really trying to reach out to people who would be key team players for you, or reach out to people who are doing what you want to be doing, and just try to build like authentic relationships with those people. Try to provide value for them in any way. I think most of the success that I've had in real estate so far does come from the fact that I've always been in customer service. I've always been in the service industry, providing beauty services. And prior to that, I was in retail management. So bringing the people piece to real estate investing, I think, is has been really critical for me.
Okay. Are you primarily focused on residential houses or you wanting to go into bigger communities or anything like that?
So I still like all residential. I don't really foresee myself getting into the commercial space. But 2 years ago, I wouldn't have foreseen myself doing like 13 unit buildings long distance. Um, but yeah, I like that commercial size multifamily. So 5 units and up. That's going to continue to be my focus, at least for the next year or so.
What is your sweet spot for you of how far you go in distance wise?
You could easily drive by on like in an afternoon if you wanted to, and then there's you could not easily drive by in an afternoon. So, regardless of how far away it is, it's kind of all the same if you couldn't easily drive by in a day, you know?
Okay.
So it doesn't really make a difference to me if something's so I live in Massachusetts. It
Mhm.
doesn't really make a difference to me if something's in Washington State or California or Texas because I can't drive by regardless. I would have to fly there either way. But I think becoming open to long distance investing has been so pivotal for me. Like just opening my mind to that and being willing to go through the growing pains of getting into my first long distance property has really changed my life, honestly.
How often are you flying to the properties?
So I've been doing long distance for like a year and a half. I think the first long distance property, which was only 2.5 hours away. So some people wouldn't even consider that really long distance. That one I had for about a year and a half. And I really would only go there, yeah, if there was kind of a disaster or just if I wanted to kind of see what was going on. But I think, especially as somebody who, doesn't know a ton about repairs and renovations and construction and the trades and stuff, it's really not super helpful for me to be there. Um,
Okay.
I think going to your properties like at least once a year just to kind of see it in person, meet with your team in person just to have that presence,
Mhm.
can be really impactful. But I don't know that physically being there much more often than that's really necessary for just the traditional long-term rental. Like if you were doing, a more complex like short-term project, maybe it would be different. But for the projects that I do, I don't think it's really necessary to go more than annually.
On that note, if somebody's getting into it and they're, say, at your spot, how do you approach the risk factor?
I mean, obviously, there's always risk, like with any investment. I think there are a couple key ways that I tell my partners how I mitigate risk with real estate. So, one is excellent property management. So, property management teams who are treating it like a customer service business because it is. Property management teams that are properly screening tenants so that you can avoid problematic tenants in the future. Um, Another thing I like to do to mitigate risk is buy value add only. So something where we can quickly, over the course of a year, create a lot of value to the property so we can force the equity there. That way, if say, we're in a commercial loan with a fixed rate for 5 years, in 5 years, what if the rate goes way up and it's no longer a good deal? Well, we'll have created so much equity by bumping up the income for the property that we could actually do really well if we just had to sell it. So, value add and really good property management, I think, are my two keys there.
Can you share an example of a challenging investment for you that had promise and then it just went down?
I can. So, my second property I ever bought, and it's funny because the first two properties that I bought, I was still a renter. So I was renting an apartment while I had these two investment properties. But the second one I bought was a semi long distance short term rental. And I was really jazzed up about getting into short term rentals. I myself had visited this area many times. And there was a lot of promise that it was going to be a really great deal, super profitable. And it ended up just not being as good of a deal as I expected. So the summers were incredible, but the winters were really hard to at least break even.
Okay.
So that said, I think over the course of the year, it would have been just about a break even property, which for the time that goes into managing a short term rental, and the equity I had trapped in it, it just wasn't really worth it to me when my primary goal right now is cash flow. So what I ended up doing, I could have sold on market and had it just be a break even deal, like a true break even at the end of the day, but I would have taken away a lot of really good lessons from owning it. I ended up selling it with creative financing, actually. So that turned what would have been a break even deal into a $75,000 deal. I just won't realize that profit until the end of a 3 year term. That's kind of another way to mitigate risk, too, is just make sure you have creative ways out of a deal if it doesn't end up being exactly what you wanted.
In securing funding, how do you go at low budget properties or you shoot for high budget properties?
Right now, going forward, I really like the properties that I've been working on. So over the summer, a partner and I, we bought a 13 unit value add multifamily in Chicago. And right now, I'm actually under contract on another 13 unit value add property about 7 minutes away from that one with a different partner. So I really like that sweet spot. I would like to maybe push it up to closer to 20 units for the next one, same
Okay.
area, because I have a really, really great team out there. Um, and as far as funding, what's been working really well for me with these last couple deals is bringing in capital partners. So, ideally, someone who has capital that they know could be working harder for them than it is in the stock market, or they want something that they have a little more control over the success of the investment.
Mhm.
And someone who really knows the wealth building power of real estate, but doesn't have the time or interest in doing it themselves or the knowledge to do it themselves. So, in coming together, they bring the capital and I bring the time and knowledge, and we buy together. So, typically, they will bring the down payment, the closing costs, the reserves, and any immediate like renovation costs that we'll need. And then we will get a commercial loan for the rest.
When you sit down with a partner, what is the criteria of selecting an investment property?
Selecting a property. So it really depends on the partner. I mean, that's why I like working one on one with people because it's a lot easier to meet two people's goals than it is to meet a whole mess of people's goals.
Agreed.
So I love working just one on one with partners and just figuring out, I know my personal goal is cash flow,
Mhm.
value add, so we can force equity and get our net worths up and to hold something for at least 5 years. I'd prefer to buy things that we're going to hold for at least 10 years, but I wouldn't want to get into an investment that we wouldn't hold for at least 5 years. And I would say, I, when we're doing the pro forma, my partner has to have a projected return on paper of at least, I would say, like 10% for an for just a cash on cash return. And then of course the internal rate of return is a little better. So that's kind of how I gauge like what's a good deal. Once the property is stabilized, my partner has to be seeing at least a 10% cash on cash return. And of course, real estate rarely goes how you think it's going to go on paper, but that's, my mile marker for, okay, this is a good deal.
If you have to buy a property and you have to like completely reflip it and everything like that, or is it you're looking for a property that you just have to come in and fix a few things, maybe sheetrock and all that kind of stuff, flooring, but it's not a complete reflip. Which one is your preferred?
I think the property that needs a lot more, that has a lot of deferred maintenance, is more likely to be the property where there's a lot of value add opportunity. So while it's, more work to get all that stuff done at the beginning, and it can be a little more stressful making sure we have the right capital in place, that's going to be the better wealth builder in most cases. And as much as cash flow is my top priority, it's hard to pass up the possibility of, forcing all this crazy equity in like a couple of years. So I'm more into the properties that really have a lot of deferred maintenance. It can't be falling down. It can't be less than 70%
Of course.
occupied at closing. But the property that we had closed on over the summer and the one we're closing on now, according to the inspection, both needed about $100,000 worth of work, and that does not include cosmetics. And in relation to the price point, so the price point of the one over the summer was about a million, and the one we're closing on now is, we have it under contract for 775. So just to put that 100,000 in perspective.
So you said you wanted to keep a property for at least 5 years. What's your exit strategy if a deal goes bad within those 5 years?
I really feel confident that there's always a way to turn the deal around in some way. Maybe that's you've made a mistake with the property management company you selected. Maybe that's you made a mistake budgeting for renovations. I really feel like there's always a way. And this kind of circles back to what we were talking about with relationships. I mean, it's so important to me to have relationships with mentors who are a couple years ahead of me, so that when I do face challenging things with my investing journey, which everyone does,
Yes.
I have someone that I can just text and say, "Hey, this is what's going on. I'm kind of freaking out. Like, what would you do?" And it's always just the simplest answer. And I'm like, oh my God, just having that resource is worth so, so much. So I'm confident that there's always a way to make it work.
What is the main access point that you've had in getting those relationships? Is it seminars? Is it conferences? I mean them online.
I would say mostly online. And also, there's a group called Wire with two eyes, Women Investing in Real Estate.
Hmm.
It's run by these two girls, Amelia and Grace. And when I was first starting to learn about real estate, I heard Amelia on the Real Estate Rookie podcast, and I loved her episode. It was so refreshing to see like another younger woman doing this. And just with such a positive attitude about it. So I had messaged her on Instagram. I ended up doing a couple coaching calls with her. Um, I did the Bigger Pockets rookie boot camp after that. And following that, I started to go to the Wire retreats. And I've gone to a couple of those. And that's been really, really great, just being around other people who are relatable to me and who are doing what I want to be doing, or who I can provide value to. Um,
Okay.
yeah, so I think retreats like that and just networking online have been the biggest thing. I love going to conferences, but I feel like they're super overwhelming and it's hard to make actual relationships with people there.
Because there's so much going on, and to even with the sessions and everything, the one-on-one time that you need to get that relationship built. I get you. When you have a 5 year or a 10 year deal in place, if it's not as profitable as you want by the time of the 5 years, do you go ahead and sell it, or do you go ahead and can renew a deal?
It's case by case and it really depends on what my partner wants to do, honestly. Like if we're in it together. So
Mhm.
like that's another thing I love about working one-on-one with someone. Like it's truly 50-50. The decisions that we make, like big decisions like that, as far as do we keep or do we sell, are 50-50. Um, and I feel like I always just want to do what's in the best interest of my partner, even if it might not be in the best interest of me. Like if, we could sell and I could use the profits to do something better, I would still rather protect the relationship with the partner, and as long as we're both fully informed on all of our options, I would be more leaning towards doing what they want to do. But a big deciding factor, I think, is going to be, if we were to sell and take the cash with what we could buy with that cash at this point in time, would it be a better investment than the one that we have now? I think that's going to be the biggest question to ask when the time comes. Like when 5 years is up, 10 years is up, the property is optimized. That'll be the big question mark.
What does the process look like when you go to look at an investment property? Like when you go to look, what is your like step by step?
Yeah, so if I'm checking out a potential property, I reach out to the listing agent. I get the offering memorandum and any other information they might have on it.
Mhm.
I make my own pro forma. I don't really go too much based on theirs that's in the offering memorandum. I make my own based on what
Okay.
I know to be true, or projections that I could make about it. Then, as I'm combing through the offering memorandum, I'll come up with usually like 10 to 15 questions that I have for the listing agent. One is always, why are they selling? One is always, um, is anyone on like subsidy programs for rent? One would be, is anyone delinquent on rent? Like, what are the overdue rent amounts right now?
Mhm.
So I'll just kind of try to get more context and understand more about how the buildings run. And after that, I just kind of work out, well, what would I have to offer for this to be a good deal for me? Like, how could I make this a good deal for me? Um, and I do have an agent out there who I really like, who I've worked with on both deals that I've done long distance so far. And that helps tremendously too, because we've worked together in the past. So we just kind of know how each other operates. And he's more than happy to answer all my questions. I think some agents can be kind of purposely reserved with answering your questions, and I don't really understand why.
Yeah.
Um, a telltale sign for me is when I ask, why are they selling? Some agents will say, I don't have to tell you that, or that's not
Ooh.
relevant.
That a red flag there?
Yeah, so that just kind of shows me, okay, this is someone who I probably will not have a great time working with, so I'm just not even I'm less likely to bother with that property. Um, but yeah, so I'll just get all my questions answered, understand how the property is run, what the situation is, and then figure out, well, what I have to offer. What would I have to get this property under contract for it to be a good deal? In the background, I'm keeping in touch with my lender so I can see where rates are at, so I can see what rate I should be underwriting a property at. I'm keeping in touch with my partner, just kind of updating them, like, here are a few properties I'm looking at. I think we should offer on this one. I think we should offer, under on this other one. So there's a lot of moving parts at once.
How many red flags does it take for you to not be interested in a property? Is it by case with the partner, or is there personally for you going into it?
I have a pretty strict criteria in my head of, it can't be falling down, it can't be half empty, it can't be in a neighborhood that is more dangerous or less desirable than the ones that I'm already invested in. Like, if anything,
Mhm.
I'd like to
Mhm.
level up neighborhood wise or just stay the same. And if my property manager would advise against buying in a certain neighborhood, then I'm not even going to look at it.
Is there anything else that people should look out for when dealing with an agent?
I mean, not to say you shouldn't even bother with them because they're just doing their job, trying to act in the best interest of the seller. Like, maybe the reason that they're selling would give me like a competitive edge if I knew. Um, but, I think empowering buyers with all the information, it just makes it makes it easier for everyone to see if this is a good opportunity or not. Um, I think agents who are non-responsive or don't want to share the information that you need in order to figure out if it's the right opportunity for you, I would be reluctant to even continue underwriting them, let alone make an offer.
How do you focus on market trends and keep up with them?
There's actually a podcast specifically for real estate investing in Chicago. So I've been listening to that a lot.
Okay.
I keep up with that like in real time. And also just continuing to always talk with my listing agent, my property manager, my lender, just staying in the loop with everybody. It also helps too, like if you're a long distance investor, to be a part of the local investor Facebook groups to kind of see what people are talking about in there, like what's going on. Um, I know some people have really um, sophisticated or calculated ways of like analyzing a market or looking at market trends. I personally don't get so deep in the numbers with it. Um, I think just connecting with people works for me.
You're talking about like in the community groups and you mentioned wire and going on retreats and stuff like that.
Yeah, and as far as like, keeping an eye on different markets, like the local Facebook groups for investors, always keeping a pulse on things through like my boots on the ground team out there, and that podcast too.
What is the most important thing dealing with people in real estate?
That is a tricky one and so broad. But I think the most important thing is really treating it all like a customer service business. Like it is a people business, especially when it comes to property management and landlording. People forget that you are providing a service. It truly is a customer service business. And if you run
Mhm.
it that way, then you will get better results. Um, I think a lot of people who get into real estate investing are really lacking the people skills required to make it easier and take you farther. So that's like the number one thing.
How are you trying to level up from each deal to deal?
I feel like it's not something that you have to do very consciously. So I was just telling my husband the other day how, over the summer we closed on a 13 unit. Now we're closing on another 13 unit. And it was crazy, like looking at my closing checklist from the summer versus my closing checklist now. Like now that I already did a 13 unit in this neighborhood with the same people, um, my checklist is like half as long and I'm just way less stressed about it. And I just know what's coming up. Like, I know what the next steps are. And that was my first commercial size multifamily over the summer. So now going into my second one, it just feels totally different and way more laid back, way more organized, less complicated. So I think leveling up from each deal just happens naturally. Like as you experience more and more in real estate, it's just a natural progression. But I think in terms of getting into a bigger property for next time, maybe something around 20 units, a key thing for me is I really want to find some additional mentors who are doing properties around that size, and just continuing to like read and absorb information from people who are doing that. So I like to always try and read at least like a couple chapters a week from a investment focused book, something that's filling a gap in whatever knowledge I have now. I'm a junkie for all the podcasts. Like the two bigger podcasts are my favorite. Um, but yeah, so I try to always keep purposely learning every week, but I think the learning just also happens naturally as you're taking action.
Can you share a significant lesson you've learned in real estate investment?
Yes, things are going to constantly go wrong, and that's fine. That's normal. When I got that first property, like I was saying, like the duplex, um, right after I got it, the basement flooded. Nothing crazy, but it was just because the weather did something weird and like the ground froze and then the snow like melted really quickly. It was just something weird that happened. A lot of people got water in their basements. It's not uncommon at all in New England to get water in your basement. But I was panicked. Oh my god, I was freaking out when my tenant called and told me. But because I just didn't want to do anything wrong, I wanted to take care of it as fast as possible. I didn't want anything bad to happen to any of their belongings or the property. I didn't want them to think I didn't care. I was just, like, freaking out, and I sent my husband to go, like, install a sump pump and, like, take care of the whole thing, and looking back now, it's funny how much I freaked out about it, but every month, something's gonna go wrong.
Mhm.
Something a wrench is gonna get thrown in something, you're gonna have to course correct, there's gonna be unexpected expenses, and um, that's kind of like putting out those fires and dealing with all that little stuff is what we get paid to do as investors. So um, that I think is the biggest thing I could share with someone who's on an investing journey or getting started with an investing journey is like it's not going to go according to your spreadsheet. There's going to be hiccups, there's going to be curveballs, but like that is just how it is, and that's what you get paid to navigate.
Is there an age limit you're going for to be retired at, or are you just shooting for that goal?
I consider myself semi-retired now because I only have to physically go into my studio 1 day a week. So, retirement for me is time freedom, location freedom, financial freedom. Um, so only having to go into the salon 1 day a week, I feel like I'm pretty close to those measures. Um, I would like to achieve my investing goals in the next year and a half. So by the end of 2024, I would say is
Mhm.
where I'd like to kind of check off my big investing goals.
Are you wanting to continue after that, or is that just, when you wanna start slowing down?
I would say, I'll be happy with that, but but I know I won't. Um, and this is like a running joke with me and my family. Like they say I can never be happy with anything, which is not true, but I just, once I achieve one thing, I'm always just like, what's next? What's going to be the next level? Um,
So
but I
you're
think
not wanting to, like, stand still? You're
no.
not a per I got you.
But, once I achieve my investing goals, which I'm confident I'll be able to do throughout the course of next year, at that time, I'll be able to slow down mentally and just kind of regroup and look at how everything's going and just take maybe a little bit of time back, like, and get a bird's eye view of everything and decide if I wanna pivot and just kind of slow down and decide what the future is gonna look like.
Is there any other, industries that you wanna tap into?
I don't know. I've always been curious about more unique vacation rentals. So, like cabin lands and geodomes and, redone vintage campers, like stuff like that. I think
Okay.
those would be like passion projects that I would do later on. So once
Mhm.
I've achieved like the boring investing goals with long-term rentals, I'd love to do more fun stuff like that afterwards. Beyond just investments, like real estate investing, there aren't really any other industries that I'm interested in, but I definitely see myself getting into different passion projects once I've achieved my boring goals. So my boring goals are a net 40 units.
Mhm.
And again, that's what I think I should be able to achieve by like throughout the course of next year. And I say a net 40 units because, as I said, I own some units alone and then I own most units in partnerships. And I think unit count really is just a vanity metric. Like, I kind of hate when people talk about it, but it's just easy for me to wrap my head around because I know that the properties I'm buying I buy with a certain criteria in mind for how much each one should cash flow per unit once it's optimized. Um, so I know that being at a net 40 units will cover all of my life expenses and more.
Was there any moment that you were discouraged and you just had a moment where, "I have to do this. This is what I wanna do. This is what I'm going after."
Yeah, I have those moments like every month. I don't know like if other people in real estate investing like know some secret that I don't know, but I think that this has been the most like emotionally tumultuous venture of my life is investing in real estate. And people, I mean, I know I cannot be alone in that. There's plus like I think, if you're in real estate investing, like most people I know who are in this industry are so passionate about it and they really love it and they could talk about it all day. So when you really are so passionate about it, it's hard when you're not getting where you want to be in the time that you want to be getting there. Like it can be really discouraging, and it's not something that is solely dependent on you putting in the work. Like there's interest rate changes. There's, shifts in the market. Like there's team members, like there's so many other things, outside factors that do directly affect your success with real estate. Um, so sometimes even when you're doing everything you're supposed to do, it just doesn't work out. Or like I said, there's all these wrenches thrown in it. You
Yeah.
might feel like you're finally getting to a good place and then something happens, and yeah, so I think the highs are high and the lows are low with real estate as far as just the mental and emotional piece of it. And I wish more people talked about that, truthfully. But so yeah, I think every month I have a like a moment where I'm like, this isn't working, but it is working. It's just easy to get caught up in the moment.
So you mentioned that a lot of people don't talk about that. What are a few ways that you take in managing that part of it?
I think being connected, like having peers who are around the same point in their journey as me and who are relatable to me is really helpful. So like when I'm really having doubts about this whole venture, I have people that I can go to and say, I need a pick me up right now. Like I need some reinforcement that this is the right path. Um, and, with that group Wire, when you go on a Wire retreat, there's a WhatsApp group with everyone who went on that retreat.
Okay.
And those groups are still, so active months and months after the retreats. So being able to go into that group of relatable women who are also doing what I want to be doing, and say, this is what's going on, this is how I'm feeling, and just getting so much support is just huge. I think it's a challenge that everyone faces where, most of us who get into investing don't have people in real life who are also investing. So it
Mhm.
can be very lonely. So finding those communities online is critical for getting through those tough moments.
Do you have any advice that you would say if you're feeling, I mean, extremely down and you don't have any community like that, what would you do?
Well, in the moment, it's tough. I mean, I guess just remember why you started and try to believe me when I say that everyone is having those same moments. Even the people who you idolize, who are light years ahead of you in their investing journey, they still have those same moments, just about different things.
Mhm.
So everyone's dealing with what you're dealing with. But when you pull yourself out of it, that's when you should go find those communities so that you can deal with it better next time. Um, and also just give yourself some time off. Like if you have been just working so hard at this and it just feels like it's not coming together or it's getting really frustrating, purposely give yourself like a week off of all things real estate to just regroup and reset, and you can always come back to it after. In the grand scheme of things, a week off is not going to hurt you.
Would you say that that's a way to deal with burnout?
Oh yeah, for sure. And I think preventing burnout is key too. Like don't just react to it when it happens.
Yes.
There's one sort of like business influencer person who I like, who always preaches a week off every quarter. So every quarter have a scheduled intentional week completely off of all things business. You don't even necessarily have to go away on a vacation or something,
Mhm.
but at least just get out of your regular environment and really disconnect from your business.
And I would think that if you're organized, you would you'll be planning for that week so you could set your schedule up to where everything will be done in before that week ever comes. So you won't have to worry about a lot of things so you can take yourself out of it and actually enjoy that week.
Yeah, and I think a lot of people who are, in the entrepreneurial space or in the investing space, like feel guilt when they take time off, but intentional time off like that is productive. Like it's not only essential to your business, but in your mental health, but it is productive because the shifts and pivots and the breakthroughs that you have and those weeks off um, are so clutch, like for achieving your goals in the long term. So taking those weeks off really is more beneficial to your business than you would think.
Well, is there any last tidbit of information that you want to give somebody just getting into it?
I don't know. I feel like we've shared a lot of good tidbits so far, but I think just ignoring the naysayers. Like, if someone's not doing what you want to be doing in real estate investing, that is not someone whose advice you should be taking. Take the
Agreed.
advice from people who are doing what you want to be doing.
Well, thank you, Jessie Dillon, for coming on the Uncharted podcast. It's been an absolute pleasure talking to you.
Yeah, thanks
And
for having me.
yeah, and I'll see y'all in the next episode. And take care.